Welcome back to Small Caps. My name's Kerry Stevenson. And ladies and gentlemen, I've got to tell you, this is going to be one of my favorite interviews. Why? Because we're going to be talking, I've got to stop saying going to be talking about wine. And I'm delighted to welcome the founder and CEO of Digital Wines, Dean Taylor. Dean, welcome to the program. Wine, one of my favorite subjects.
Thanks for having me, Kerry. It's great to be here. I think it's a lot of people's favourite subject. So, I think one of the things that's probably put us on the radar is that we're only one of three ASX listed wine businesses. So there's less than a handful of us.
Well, and I am fascinated by this. I'm fascinated by how the market works. I mean, I'm a consumer of wine, not an investor in an ASX listed wine company. So I'm curious, first of all, can we find out a little bit about your background? Because it's brought you to this position you're in now. So did you start off in the wine business?
No, look, actually, I started my working professional life as an architect, believe it or not. And wine back then was, I guess it was becoming quite an expensive hobby or habit, depending on which way you looked at it. I was looking for ways to make, wine, consumption and wine travel, find a way to make it tax deductible. And so I started a little business storing wine for friends and family. And right place, right time, I ended up growing it into a national business with, I think now that company's got 15 sites around the country.
Wow.
And controls probably 80 or 90% of that market. And so that was sort of started as a little side sort of gig and turned into becoming a major business. And I guess that in many ways was probably my MBA. It's where I first learned about business and got excited about growing businesses. And I think what's in many ways the training I had as an architect is I think it was really beneficial because if you break down the process of building any sort of project or building, it's very similar to a business, and it all starts with the vision, the idea, and then you get a whole bunch of consultants involved to help you document it, and then eventually you've got to find someone to build it, and that's the staff. And so I've applied that sort of methodology, and this current venture is my 8th startup in the wine and technology space, and so certainly the most exciting of all the businesses I've created so far.
So you've created 8 businesses. This is, and have they all been in the wine and technology space? And do wine and technology, does technology help to grow a business like this? I guess, you've got logistics, you've got platforms, you've got to integrate, you've got customers to deal with.
Yeah, look, I guess technology has always been either we've used it as a disruptive tool. So in a business like Cracker Wines, we created a online marketplace, or I've used it to differentiate our business services. And so even WineArt, the first business that I started, we were just storing wine, but we were the first company in the world to allow their customers to log in through the internet. Back 20 years ago, probably.
Wow.
Through dial-up connection, and you could actually, see what wines you had in your cellar, and you could place orders on those, and then you could even trade them like stocks and shares. So we sort of, the wine is, in many ways, the wine industry is one of the things I love about it is it brings, the old and the new worlds together, and in many ways, all the businesses I've had within the wine industry have very much, technology's been at the core of them, but we've tried to retain, I guess, the romance and the really, the exciting and passionate stuff that attracts people to the industry as well. So.
Well, your ASX code is DW8. Let's talk a little bit about Digital Wines and why you've started this business, your 8th. And what's unique about Digital Wines? Why should investors be sitting up at the moment and taking a look at Digital Wines?
Yeah, well, look, so first part, I guess, is, why. And I guess in many ways, the whole business plan for WineDepot was a response to the challenges that I'd faced in my other businesses, and particularly the online retail businesses and the need to try to deliver wine quickly and cheaply to customers. And, I went around looking for a solution that was basically what Wine Depot is now, and there just wasn't anything like that on market. And so I guess it was probably the genesis of the idea, and then I guess what I've really I've loved about the industry is, I guess, that you've got farmers meeting fine dining, and there's this great collision between like what's a raw agricultural product and some of the the nicest places to eat and drink in the world. And so, but a lot of between the I guess the vineyard and the venue, there's a lot of margin lost to middlemen. And so it's quite sad, but a lot of the producers actually only really receive just a small part of the profits.
Right.
Yeah, and so I guess it's really been, I guess, recognising that problem that's also driven me to create this this latest business with Wine Depot, where we've built a market, or building a marketplace, about to launch a marketplace where the producers can actually sell directly to the trade buyers, totally avoiding distribution, and putting somewhere between an initial 35 to 50% profit back into their pockets. And so, I guess it's one of those things that's, if you're passionate about the industry and the people who are, the real, the ones actually toiling away, doing all the hard work and taking on all the risk, to be able to provide them more return is something that, it excites me, and certainly has been a big inspiration for the Wine Depot business.
Well, I bet the producers are loving you at the moment. I've got a question though. I go down to BWS or Dan Murphy or whatever. Are you going to? Is this disrupting their model? I don't. I'm just trying to work it out in my head from where it sits and where your
So at the moment we're purely B2B facing, and so we're providing a connection between suppliers and licensed venues or bottle shops or online retailers. And so whether BWS, they might source some products through us, and it might be a more efficient way for them to buy rather than going through the traditional distribution. So we could support them. We could certainly support them in their online strategy. So if they're wanting to take orders from you through the internet and then have it delivered to you, we can basically do that for them directly from the producer's inventory, saving the need for them to double or triple handle it. And so,
what's the current model? Well, I mean, like, let's take you out of the picture. You're not around at the moment. Is it literally it goes to the producer and then there's like 2 or 3 different companies to get to the end consumer?
Exactly. So, there's typically obviously the suppliers, the producers. You've then got a layer of wholesalers who, big businesses like Metcash and the like. They operate in that space. There's also some independents, and then you have distributors, and then they'll take on a position on that inventory, and that's their job to really get it out there and push it out into the market. And then you've got the retailer, who then is buying it at a wholesale price, making a margin on it, and then selling to the consumer. So every one of those steps, someone's taking some margin.
Yeah.
So it's very erosive. Whereas I guess what's happened, in more recent times is, there's been a big push for direct to consumer, and that allows the producers to sell directly to the end customer and pick up all that extra profit, which is fantastic. I guess what we're trying to do is allow them to do the same thing to trade buyers. So that's still being sold to a licensee, like a restaurant or a bar or a bottle shop, or, as I said, online retailers or marketplace. But it allows them to avoid at least the wholesale and the distributor steps. And the other thing too is every time it goes through, these different people, there's handling involved. So there's fees and costs associated with that. So if we can strip away a lot of those extra movements, it's you're obviously saving a lot in terms of the resources required, but also the cost of it. And I guess even at a environmental level, there's a reduction in wastage and fuel consumption and those sorts of things. So, yeah.
And I guess as well, the potential issue of mishandling and accidents.
Absolutely.
Wine down the drain. That would be a shock.
Look, it is. It's heavy and it's fragile, and it's unfortunate. A lot of the time the packaging is not very good, and a lot of wine is damaged in transit. And that's one of the benefits of the model that we've created is that we're holding inventory on consignment locally in each of the major capitals, and from there we're able to pick and pack and deliver to the customers same day or next day. And because it's not travelling as a case from a regional area across the country, and obviously there's the speed benefit, but there's also the cost benefits. It's much cheaper for them to ship locally, but then there's the time. And modern consumer, in online retail, there's a saying that 2 days is too long. And
you're kind of like the Amazon of the wine industry. I mean, it's kind of an Amazon model, isn't it?
That's a very good way to describe it. We're very much like that, but focused in wine and beverages. Sort of Amazon, look, they certainly do this for other alcohol and beverage companies as well, but it's only for the products that they're selling through to their customers. Where the platform we've created, we'll work with anyone. We'll deliver to whether it's for orders coming from a restaurant or bar, or whether it's for Dan Murphy's online, or whether it's Gray's online, or whoever. We're happily, just to support and provide them that infrastructure and that service for their customers. And Amazon won't do that for anyone else. And so, if anything, I'd like the analogy. I think we're very similar to Amazon, but we see them as a partner going forward, because we're looking to allow all of the different wineries we're working with to sell their wines through that channel, and we will then support the deliveries that are generated through Amazon.
Who's going to be the fall guy on this new disruption? Because it's disruption to the industry, but the ultimate winners are the producers and the end consumer, from what you're saying.
Yeah, look, certainly, I guess if you say the loser, it's probably going to be the distributors, because, they sit in the middle currently. They take that margin, 35 to 50% of the wholesale price.
Wow.
But I think what the platform we've created, in many ways, it's almost a cooperative platform that allows people to leverage the scale that we've created and the infrastructure and the technology to make their businesses more efficient. And there's over 2,000 distributors in Australia, wine distributors, and they all have their own little warehouses. They have their own vans. They have, they don't have a lot of excess capital to invest in technology or marketing and other services. So it's incredibly, it's very inefficient. There's a lot of fixed overhead, and as a result, these businesses don't actually make a lot of profit. And so, rather than seeing us as getting, removing them from the equation, we're giving them a platform that allows them to remove all of that warehousing, all of that back office, even the finance administration, and then they can just concentrate on generating demand and sales. And so, if anything, it allows them to simplify their businesses and pivot more towards what they actually all like doing, which is, getting out and building relationships and driving demand. And
potentially increasing their bottom line, which would be good. Now, I really want to dive into the company now. ASX code, as I said before, is DW8. Your current share price is just shy of 5 cents. Let's talk through the share price, because as investors, what we're looking at is what's the growth, what's the projected income. And I know you've done very well in the last year. Obviously COVID's probably been a good thing for you guys.
It's been a fantastic thing for us. Yeah, we're very grateful. Yeah. So look, we've had a great run. I mean, it's interesting in the sense that we're a startup, we're a pure startup, and so for investors, they've got the benefits of the liquidity of being in a publicly listed company, but they're getting the exposure to that high growth and that I guess the potential financial upside in investing in the business. And so, for the early investors who came in, in the first seed round that we did, sort of over a year ago, they've seen a 10 times return already. So, and it's still very early days. I think the market is still just really starting to get their heads around the size of the opportunity that we've got, just, not just here in Australia, but globally. So I think that, in terms of the company itself, you're right, we've had a lot, fantastic growth. Like last month, again, we had over 30% on the previous month increase in volumes. That's all just starting to accelerate. And, as we come into this time of year, there's always, some seasonal growth, but, a lot of the growth we're seeing actually isn't in the additional volumes from our customers. It's just in the new customers coming on board. And I guess all of that compounds, and we're seeing a classic J curve in terms of our growth rates. And that's going to be magnified again from a recent acquisition of another wine logistics business called Wine Delivery Australia. That brings another 180 new customers to our business and all of their volumes. So it's going to be pretty exciting, sort of 3 to 6 months as all of that volume really starts to push through our network. And then that, we intend to launch that direct-to-trade marketplace in March next year, and that's going to drive even more volume again. And so it's just a really exciting time to be part of the business. And I think, there's been a lot of shareholders that have realised, sort of what we're doing, and even when they talk to people in the industry, they understand there's such a latent demand for what we've created. The product market fit is there, and it's really now just about how quickly we can engage with almost every winery in the country.
Yeah, it is still reasonably early days in the life of digital wines. My question to you is just going back to that share price. You've had a few options being sold into the marketplace. Do you think that's put pressure on the share price? That's number one. And number two, how well are you funded going into this future? Because you're looking at acquisitions and all sorts of things. I just want to try and understand where the growth is and whether you're fully funded.
Yeah, so you're right. There was some legacy options that were attached to the ASX from a previous incarnation when it was called Wine, and those options were issued to management and consultants and the directors at that time. I mean, just about all of those people have moved, long since moved on, and so I guess we've had such a fantastic growth in the share price over the last 12 months. There's 220 million options, which I'm pretty sure they'd all written them off, where it all came into the money. And so and they've been converted at 3 cents each, which has been great because it's, we've ended up with, best part of another $7 million in the bank account.
Okay.
But there's a lot of these people who hold the options have been coming and selling them almost straight away. And I guess they're not really, anything above 3 cents is profit for them, and so they haven't been as careful, I guess, with how they've gone about their selling. So it's softened our share price a little bit, and that'll continue for a little bit longer as those as that new shares are sort of soaked up with genuine investors and not just these lucky folk that the options.
Yeah.
So, but in terms of the we certainly hadn't budgeted for that capital to come into the company, and so and we did a capital raising earlier this year to make sure we had sufficient some working capital to achieve our get to profitability on the current business plan, and so we're fortunate in the sense that we've got the ability now to start to go out and look for potential acquisitions and things we can bolt on to the business to either add value in terms of the proposition that we're offering, or add volume to our network. And so there's quite a few opportunities that will sort of fit that mandate, and sort of hopefully we'll have some more announcements in the not too distant future to excite the shareholders with.
Just remind our listeners when you did the capital raising and how much was raised. What's your money in the bank at the moment? What's your burn rate? And I'm sure you can't talk about the acquisitions at the moment, but you've got some insight.
Yeah. So look, the capital raising was completed by Blue Ocean stockbrokers about 2.5, 3 months ago now, and they look. We've got a very strong retail register, and we went out to them and specifically to try to bring in institutional investors, and we were lucky that they were able to bring in 12 funds. And some very well-known funds. I won't mention names at the moment, but it's changed, I guess, the dynamic of our register, which has been fantastic. We raised, we went to market looking for $3.5 million from the institutions, and we launched the offer on a Monday morning at 10, and by 4 p.m. we had $13.5 million in bids.
What? That's ridiculous.
It was heavily oversubscribed. So we increased it a bit. We didn't want to take, obviously, we're conscious of diluting the shareholders, and so we took on 5 to try to so we could bring all of the funds in. And then we said that we'd go to the shareholders and give them the ability to participate on the same terms in a share purchase plan. And we put aside $1 million for shareholders, and we had bids of 7.5. So we ended up collectively raising a bit over $6 million through that process. And as I said, that was more than enough to see us through. Provide plenty of runway. Now as all of these options, and there was money in the bank at that stage too, but with all of these options, there's basically another $7 million that'll come in by February, and by end of February, once we see all those options come in, we're probably going to have a bank balance sort of in the vicinity of about sort of $12 or $13 million. So
that's a nice bank balance. Yep.
It's a nice war chest, yeah. So so we're not. It's not burning a hole in our pocket. We'll spend it wisely, but it's definitely got to be something that aligns with, and it can help grow our main investment, which is the Wine Depot business.
Now, with the Wine Depot is the main business, and is that purely within Australia, or are you looking to emulate this sort of a business in international markets?
So we've it's mostly Australia at the moment, but we have set up the infrastructure for us to be able to expand it into China. So we've got the corporate structures, we've got the financial sort of legal structures and licenses and those sorts of things. With all of what's going on in China at the moment, it's probably related to the trade war. It's making it look less attractive for us to enter that market, at least in these conditions. But we have, though, very recently pushed into New Zealand. And so we're mostly, I guess, working with New Zealand wineries that are actually looking for ways to deliver their products to Australian consumers. And so we started a sales rep over there recently. He's had lots of success getting some great New Zealand wineries and brands on board. And so we're assessing the opportunity, but we'll probably look to push into and establish a physical presence in New Zealand next year. And that'll be in many ways the first of, I guess, will hopefully be many tests of us pushing, the model and the platform into other markets. And the likely places would be, Hong Kong and Singapore. There's quite a market for Australian wine in the UK still. Yeah. Switzerland of all places, and Belgium, Central Europe. There's a lot of wine goes through there. So it'll be wherever there's an existing demand for Australian wine, and in many ways what we are is not just a platform in those markets, but we're also an exclusive distributor of Australian brands. We can go in there with hundreds of Australian brands as part of our portfolio and become the go-to for Australian and New Zealand wine. And so, it gives us a point of difference. We're not just competing on technology and logistics.
Dean, we're running out of time. Any final comments because it sounds to me like there's going to be a lot of news coming out, so I'm sure we'll be talking again. But any other final comments for investors? Why should they invest in ASX code DW8 right now? I guess it's growth and opportunity.
Yeah, look, I think it's very early in the journey. I see significant upside in the business. I think domestically there's it's a big market, massive market, and I think that we've seen from the stats that the rate at which producers are coming on. I mean, we're growing at 15 to 25 wineries a month. I think that's going to continue for some time. But then the international opportunities, as you pointed out. But I think for us, there's other ways in which we can grow the business as a technology company, both upstream and downstream, and downstream pushing closer to the producers and the wineries and providing more technology to help them, things like managing their cellar doors and
their inventory,
and some things and inventory. And then similarly, I think we can get into the venues as well and provide them automated replenishment, so when you buy a bottle of wine straight away, there's another bottle of wine gets put on their shopping list for delivery from us the next day. So I think there's lots of opportunity. It's a great space to be in. I mean, it's, you put your money into a coal company, it's hard to enjoy the products all that much unless you've got an old coal.
No, I'm sitting here going, I drink this stuff. I might as well invest in it as well.
That's it. And look, our investors, it's we've had massive growth. I think we're sort of over 5,000 shareholders now, and for a small company, it's a reasonable amount. And they all ask us, like, where can we buy wine to support you guys? And so it is definitely becoming part of the whole, the culture of the company. And look, we're looking for ways in which we can actually make that as a little perk for shareholders, as being able to access those wines at a discounted price. So
you heard it here first, ladies and gentlemen, on Small Caps. Dean Taylor saying he's going to look after shareholders. Dean, thanks for chatting to us today. The Amazon of the wine industry is here. Watch this space. Plenty more news flow. Thanks for joining us today, Dean. Nice to see you.
Thanks again for having me. Most appreciated.